Why wait for the expiration of a covered call option contract when you can take profit early and move on to the next trade? That's what some of the smartest covered call traders do that I know. And today I'm going to break down the buy to close strategy that makes it all possible. So when you sell a covered call, you're opening an options position. Buy to close simply means that you're buying back that option to close out your position early before expiration. This lets you lock in most of your profits, reduce the risk of your shares being assigned, and then sometimes it even allows you to open a new position using those same stocks. So let's say you sold a covered call and you collected $1 per share in premium, or $100 total. And a week later, the premium price has dropped to only 10 cents per share, and the call is only worth a total of $10. That means you've already made $90. Now, if you buy back to close, it would cost you $10 to close out that option contract, and you'd lock in that $90 profit instead of holding that option and waiting for it to expire, just to make that last $10. If locking in your profits interests you, then come on over and join my user community at school.com/simpleoptiontrading. It's where I share tips and tricks just like this one to help you become a better options trader using really simple and safe techniques. I'll leave a link in the description down below. That's school.com/simpleoptiontrading. All right, let's spend a few moments and talk about when you should use this buy to close strategy. Now, the key criteria is when you've captured between 80 and 90% of your option premium. Now, most of the pros I know use this strategy and they don't wait for the expiration date if most of the premium has decayed. Another scenario is when the stock price isn't moving and most of the time has already elapsed. So if your call option is way out of the money and there's barely any time value left, say there's only 1 day or so before expiration, you're just tying up capital waiting for the expiration to occur. Another reason to use the buy and close strategy is because you want to roll into a new position, either with the same stock, or maybe you want to free up the capital so you can use those funds for a different trade. Closing early lets you sell a new call with a different expiration, which possibly pays a better premium. And then, of course, another reason to use the buy and close strategy is you've decided you want to keep your shares and you don't want to risk having your shares get assigned on expiration. So you use the buy and close strategy to close out your option position and release your obligation to sell your shares if they get assigned at the strike price. This lets you walk away, closing the position, holding your shares, and collecting 90% or so of the profit from the option premium. I think now would be a good time for me to walk through a real example to help reinforce how to use this buy to close strategy. So let's start by taking a look at the option contract that I sold. All right, so it's for symbol ETHA. It's a covered call option contract that expires on July 25th of 2025 with a $28 strike price. You can see that I submitted this order on July 23rd, so just 2 days ago at 8:16 in the morning. Now, when I sold this covered call option contract, I collected 34 cents in premium. So here you can see it was filled later that morning at 8:21 a.m., so roughly 5 minutes after I submitted my option contract. And I received $34 as the premium payment. Now let's jump forward to July 25th, the day of the expiration, and here we can see the order that I placed to buy to close that same option contract. So this is a buy order for symbol ETHA with a $28 strike price, and the expiration date is July 25th. So I submitted my order on the 25th of July at 8:54 a.m. with a price of 2 cents, right? So a total of $2. So that's 2 cents times 100 shares. So I was going to pay $2 to close out this option contract. And it was filled later that morning. Here you see July 25th at 11:54 a.m. So roughly 3 hours after I placed my order, this order, this buy to close order got filled, and I ended up paying $2 to close it out. Well, now that I've executed a buy to close on my option contract, let's see how that affects my bottom line. So if we go back to my original analysis worksheet, we can see for symbol ETHA, where my original cost base was $27.69. And I ended up selling one option contract that had an expiration date of July 25th. Now here we are today, July 25th. This option contract that had a $28 strike price. Now originally I received 34 cents per share as the premium payment. But remember, I bought it back at 2 cents per share and I had to pay $2. So the net effect for my premium was only 32 cents. So let's go ahead and put that in here. So we can see I've updated the 32 cents as the premium payment. my total investment is still the $2,769 for the shares. Now I ended up keeping my shares, so there's no price appreciation profit. So this goes to zero. And the total premium I received was $32, which represents a profit of 1.16% for this 2-day option contract. Now obviously $32 of profit in 2 days is not life-changing money, but that's not the point. The point is, I'm able to show you how you can lock in profits from selling a covered call option contract. Now later, as we get more experience and we improve our skills and we're able to execute larger covered call option contracts, and we'll slowly grow from $10 per month in profit to $100 per month in profit. And as we keep growing and getting more experience, we'll eventually get to $1,000 of profit per month. Well, at least that's our goal. And if I show you the right way to do that by making smart option trades and minimizing risk, then there's no reason why you can't get there just like I have. So as you can see, this buy to close strategy helps you take profits early. It reduces the risk and also frees up your capital and your shares so that you can move on to making more profit in other areas. It's one of the most underused tactics of beginner covered call traders. Don't forget, if you're interested in learning more about simple option trading and helpful tips, tricks, and techniques like this one, this buy to close strategy, be sure to join my community over at school.com/simpleoptiontrading. I'll leave a link in the description down below so you can join today. I look forward to seeing you over there.